Hey everybody, welcome back to another beautiful day in real estate. We have a lot to go over today. There's a couple talking points we'll go over. We'll talk about people need home equity growth to help build wealth and why that's important. And correlating into we've been tricked to believe that renting is the new way to go. And building is getting more expensive. How are we going to combat that? And then we're going to talk about why we're not having a 2008 crash once again. I have some stuff I'll go over, and then I'll kind of go talk about my own personal opinions, and we'll have a good time. So let's jump into the interest rates as we always do. You guys, 6.35 for the national average for conventional. Let's say that is closer to 425 for the national average. Boom. So remember, that's a $2,600 payment before you've included PMI, property, mortgage, insurance. That's before you've included homeowners insurance. That's before you include utilities. This shit is a lot. It's a lot. Right now, I'm working with a young couple, brand new buyers, never been in the market. $3,000 a month is what they're expecting to pay. Dude, when I got my first house, I was bummed when I had to pay $1,800 a month. This is a different time. Anyways, again, the world's different than it was when I bought 6 years ago. There was a lot of different things. I bought in somehow at the perfect time. Did not know anything about real estate then. Just jumped in. I was with my wife at the time. We were dating for about 6 months. I said, you know what? I'm buying a house. I'm not going to rent ever again. I'm done with this bullshit. And I said, you can come move in with me or you can do your own thing. And she moved in with me. And here we are with a kid, married, all that fun stuff. So anyhow, real estate, you guys, is extremely important to be getting into. All right. Doesn't matter when the market's up or down. I talk about this a lot. And, you're going to have people saying, oh, we're going to see a market crash. There's always a better time to get into real estate. No, there is not, dude. We forget because we've been so programmed at this point to believe that 6 months to a year, we should be seeing major profits. You guys, that is not how money works. All of us are gambling at this point. There was a token that came out on the DEX, the Decentralized exchange, and it is an oil token coin that my buddy told me about. I looked into it. It is literally a meme coin that follows oil prices, and people think they're investing. We're gambling, dude. We're gambling on that. There's no basis behind why that should have any sort of value to it whatsoever. None. Anyways, so buying into real estate, you guys, especially young people right now, you got to start getting into real estate, okay? This year, I am getting into multi-units if I have to leverage my kidney. I do not care because multiple units right now are the bread and butter. There is so much availability on the market right now. There is so many people that had got ARM rates in 2020, 2021, 2022 with 5-year balloons, and now they are fucked. Don't get me wrong. The institutions know what they're doing, but the people that thought they were outsmarting the system at the time or didn't have a plan, dude, they have so much real estate to sell right now. It's crazy. It's crazy. The commercial world's a different breed. But anyways, this is why it's important because everything seems like it sucks right now. Affordability sucks. There's lower inventory on the market right now. People think there's a 2008 crash coming, but let's think about it this way. The inventory on the market in 2009, 4 million homes. Right now, we're about 1 on the MLS, I should say. 1 million homes on the MLS. We are so far away from a crash, you guys, right now that I shouldn't say so far away. Like, things could happen. I can't say it's never possible, but it's just not realistic right now. If anything, I still think that if we continue this war, we're going to see interest rates drop so they can print money so they can pay for the war. Period. They've done it before. They've done it in every war since World War I, since World War II, since Afghanistan. It doesn't matter. That's what they do. They lower things to help grow an economy. They talked about how the United States is not like a country that's typically getting bombed. So they're going to see economy growth through this period as well. So if you guys remember the beginning of this year, end of last year, most of last year, there was a ton of promised money to be coming to the United States. Again, everybody's short-term mentality believes that money, well, we got $7 trillion in promised funds. Why isn't the economy doing better? Because it takes time. If you're building a warehouse or, for example, we're building, I don't know, let's see, what was it, like Hyundai or Honda, they were talking about, producing cars in the United States. They promised, a couple $1 billion, and they're like, all right, we're going to start building some stuff and building cars in the United States. That they don't just wake up to the next day and there's a facility that's fully staffed that has everything ready to go. No, they have to go through time and money to bring everything here. They have to build stuff. They have to hire people. They have to create and establish supply lines so that they can get the product to build the car. Things are not going to change overnight. Right now, the real estate market is not great in a lot of places. North Dakota, dude, I will stand on my high horse and scream. It is fucking great here right now. People are moving right now in the spring market because it's a little bit different than big cities. Big cities, there's a lot more people, which means there's a lot more fluctuation. North Dakota is fairly sized. It's not big. It's not super small. It's fairly sized. Like Bismarck has like 70,000 people. Like we do not have a lot of people here, but that's the benefit to people. That means there's more job security for one. The average the average income is like $78,000 a year in North Dakota. So there's a lot of benefits to being in North Dakota. It's not fancy. It's not exciting. It's not near the ocean. It doesn't have mountains. It doesn't have big cities, but it does have security. And that's what people need now. That's why there's so many people moving from California and Washington and Oregon and the East Coast. I mean, most people I'm seeing coming from, California, Washington, Oregon, but people want to go somewhere where they feel safe again. They want to be able to leave their car on in the afternoon when it's the middle of winter and they don't want their car to, they want to keep their car warm, keep it unlocked. I'm not proud of it, but I forgot my keys in the car at night and my wallet. I don't do it anymore, but I have done it. And I came out the next morning and guess what? My vehicle is still sitting there with my keys and my shit in there and my coins and my middle console. North Dakota is a safer place to be than a lot of people think. I don't know. It's an overlooked place. I mean, whatever. Sorry, got onto a tangent there. I love North Dakota, man. I thought about moving to Florida and then I just decided against it. I love it here. I can always go to Florida and I can actually survive a lot cheaper here. And I'll just buy a place down there when I get the time. But right now, real estate's looking all right, you guys. It's just get into real estate. That's my whole point. I'll talk about it more at the end. I'll show some data here. It's just a bare necessity data. It's not going to be too deep, but I just kind of want to show you some trends. But anyhow, the head of the CME group has warned the Trump administration it's risk a biblical disaster. I can't talk half the time. If it attempts to lower oil prices by intervening in derivatives markets during the war with Iran. So I've been saying conflict. Again, it's a war right now. It is what it is. It's not something that's exciting, but it's part of what we're dealing with. They ended up, in my opinion, manipulating the shit out of oil prices. Oil prices shot up to $120 a barrel, and then it dropped to $83 a barrel and like $87 a barrel in like 24 hours. Like Friday to Monday, I should say 48 hours. Friday to Monday morning, Friday afternoon to Monday morning, oil prices moved significantly. They're trying to keep oil prices down. By keeping oil prices down, they can keep gas prices down, right? And that was something that was ran on the administration. We're going to have the lowest gas prices we've seen in decades, blah, 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 right? And we did for a time. Now we are not. Now it's back to $3.20 a goddamn gallon. It cost me $75 to fill my truck the other day. All right. But right now, they're trying to manipulate the markets in a sense. And this is not new. This is stuff that's happened in the past. Different countries will do it. You'll see groups, you'll see a lot of money. You'll see, countries, they manipulate the markets because they need to manipulate the markets. If the markets ran naturally, a lot more people would make money. A lot more people would lose money. They have to stabilize it to some extent. I don't agree with it, but it is the world that we live in. All right. So the other thing is right now they just passed a bill, or they presented a bill. I shouldn't say they passed, but they presented a bill that's going to prevent the institutional investors from buying more homes. And I've heard the rumor that it's going to state they have to start selling some of the homes they have. For me, that's hard to believe. I just don't see a way that they're going to present that. But this also correlates to a central bank digital currency bill, which in this day and age, dude, like these bills that are getting like presented make no sense to me. Like there's so much packed into these bills. There's like 20 different things. And they're like, this is about housing, but also AI, but also lending, but also cryptocurrency, but also cars. And you're like, what are we watching here? Like, what is this? Anyways, so We'll touch on this real quick. So the Senate just voted to ban federal bank digital currencies. So this is central bank digital currencies. Essentially what that is, you guys, for you, those of you that don't know, it just means that the government is coming out with a dollar, or was trying to come out with a dollar that would be backed by the government. So again, we're just going from the dollar to a central bank digital currency. It's same shit, except there's more control behind a CBDC. Anyways, I'm not going to jump into that because it's a lot. It's a lot to dive into today. Road to the Housing Act passed 89-10 bipartisan vote this week. An important clause: it protects open, permissionless, and private dollar instruments. So again, we're moving into a new world. We're moving into a new world, right? So decentralized real estate or decentralized finance is going to be a big thing. So decentralized real estate is I shouldn't say real estate, sorry. Decentralized finance is like being able to borrow against somebody peer-to-peer without needing an actual private equity market, which leads to my other thing. I'm going to sidetrack for just a second again. If you're not paying attention, you should check on why BlackRock and why Morgan Stanley are holding their private equity funds. They're not letting people pull money out. Again, it's a liquidity issue. I've said it in a couple videos ago, I think. Liquidity is the issue. That's the problem. That's why cryptocurrency is a solve. Blockchain is a solve, because by releasing it and having instant settlements, you have so much more liquidity in the market. To put it in perspective, if I want to send $1 million from here to Switzerland, I need to put $1 million in this bank account, and the bank in Switzerland has to have $1 million on file to accept it. It has to go through a publishers clearinghouse, and it takes about 48 hours to settle. It's expensive, costs about 6% a transaction. It's expensive, and it's clunky, it's slow. So liquidity is locked up, so they have to keep that $1 million. Now imagine if I sent money and it was settled a minute later. You don't need that liquidity anymore. You don't need it. That opens up liquidity. It was like $11 trillion last I read. That was maybe more, probably 17. But trillions of dollars with a T that are holding money in the bank accounts right now because they need to. They need to have liquidity on file to transfer money. But if you would remove that, again, kind of going back to decentralized finance, where you can use a peer-to-peer lending system, it's like using a private lender, right? So private equity is not being able to be pulled out of these funds at BlackRock, Morgan Stanley. And there's one other one, can't remember it off the tip of my head, but you can't pull money out because the money's not there. There's no liquidity. You need liquidity. So again, we could look at history. What happens when they need liquidity? They're going to start printing money again. They're going to have to lower interest rates to print money, and they're going to borrow more money. And again, correlating to a war, when a war happens, what happens then? They need more money, so they print more money. They're talking about the dividend checks coming in from tariffs. Again, we got COVID checks, and we got checks back in 2008 when Obama was in office. $600 checks. We got $1,200 checks for that. You guys, this is the way of saying, hey, we're here to take care of you. Here's some free money. And people do exactly what they do. They go and waste it. They spend it immediately. Because we are so bad with money at this point. Again, let's kind of follow the trend. We need liquidity. The bank lowers interest rates. We print more money. We provide more liquidity for the market. Okay? Same concept is going to rely here. Now, things are probably closer to a recession now than they have been recently. And I think it's, and I'm not talking I'm talking a full-blown recession, like an actual recession. There's been a lot of changes in the definition of recession in the last few years, but they need to create liquidity, and that's where universal basic income comes into play. So universal basic income is the government paying you, and they did a form of it in COVID. If you were at home and you were on unemployment, technically that was universal basic income, where you were getting an allotted amount every month for sitting at home. You were incentivized to sit at home, because even I was. I still went to work because I couldn't sit in my house, but I would have got paid more to sit on my ass than I would have to go to work at the time. I was working at Buffalo Wild Wings at the time. And if I were to go to work, I would probably made about $1,000 less a month. Because what they do is they have to create liquidity. By creating liquidity, they give it to you, saying there's no strings attached. There is strings attached. It's called inflation. It's called higher priced items. It's called the devaluation of your dollar. Saving money in your account does absolutely nothing. Nothing. I mean, dude, in order for that to be valued, like I have enough in my account for 6 months because that's like my threshold, but that money pisses me off because I'm losing value every day. On average, even if we're at a 2.5% inflation rate, Okay. 2.5%. That means that my money has to be making 2.5% or I'm losing value every single year. Right. And then on top of that, I'm borrowing money. If I borrow money, this is where debt really gets dangerous for people because they borrow money. They borrow at a 3% interest rate. Now you're paying 5.5% on your money that you don't even have yet. So you're betting on yourself paying off somebody future money that is losing value while it goes through. That's why assets are so important. That's why real estate is so fucking important. Because yes, people bought houses in 1997, and people said this. You know, I hear it all the time. Oh, they bought their house for $50,000 and selling it for $500, selling it for $1 million. Blah blah. Yeah, because they got into real estate. That's what happens when the value devalues. The value of your home goes up. That's what an asset is. That's why Bitcoin's so popular. That's why stocks are popular. That's why bonds are popular. That's why buying real estate is popular, because you have to build some value behind it. Okay. And when we get into uncertain markets and like war times, that's where assets actually gain value. Dude, the market's been okay. Like the S&P's been doing pretty good. We've done some good stuff, right? But everything else is kind of just flat right now. It's neutral or it's negative. If you're in cryptocurrency, unless you are a firm believer, you're shaking in your boots right now. But in real estate, dude, I'm buying a house. I'm building a house this year. I'm pissed because last year I could have built a house for 7% less. And I was like, nah, being in real estate, I pulled this out of my ass. And I was actually really annoyed. I sat down and I was like, all right, I don't want to spend that much money a month. I'll wait till next year. I'll get in next year. Dude, I'm paying like $40,000 more for my house. And I'm a builder, mind you. I'm a builder. We renegotiated our contracts with all of our guys today. And this has been, it's been wild. I'm working with a guy right now. I feel bad, but it's one of those things. I told him back in September, I'm like, hey man, prices are going up in 2026, so we need to get you under contract. Now, I will honor my pricing in 2026, but if we don't get it before the end of December, I can't make it work. Came back in January, $45,000 more to pay, build that same house. And he goes, dude, what's going on? I was like, I told you, man, this is the cost of waiting. You could have got in at a 6.5 to 7% interest rate yet last year. I get it. It sucks. But you could have also taken 7% of equity into your new year. And that's not dollar for dollar, I know, but it costs 7% more to build the same house. I live in a house. I bought this house from the builder back before I even worked for them 6 years ago. I built it. I paid $240,000. I had landscaping included. I had the upgraded kitchen appliances. I had upgraded, I had the upgraded like sinks. I even had fans in all my rooms. I had all of the upgrades that you don't get now. I had a finished garage that has insulation in it, and it was wired for a heater. Like I had a patio poured, all of that for $240,000. Subtract all those things I said, and the base house now is $325,000. That is the cost of waiting, right there. Period. Point blank. People complain about interest rates because they don't want to look at the reality, which is you want to buy shit that you don't need, and you want to bet on yourself to pay it off. The only thing I'm adamant about betting on your future self for is your house. Buy at a 7%, buy at a 6% interest rate. Interest rates move, they go up, they go down. It does not matter. That's what they do. That's how real estate works, right? So if you're taking anything from this video, dude, get into real estate. Sit down, figure out a way to do it. Right now, I was looking at an eightplex. I was trying to completely 100% finance it. It didn't work. So I called an investor. I'm like, hey, man, here's my plan. Here's my goal. Are you interested? He said, absolutely. Make the deal work for you. Figure out a way. Dude, like right now, I'm offering a 3-2-1 buy down on my builds because I need to get more people in the door. And it's one of those things. The first year you see a 3% interest rate. The second year you see a 4%. The third year, you've seen a 5%, and that 4-year moving forward, it's a 6%. That is an average. It can fluctuate slightly, but that's what people need right now. They need to feel comfortable and excited about getting into a house, and that's a conversation starter. Oh, we have parents moving in 2 years, and then they're going to help pay the mortgage. Oh, we expect a raise in the next few years, and we just want to get into a house. Now people can get into a home and start building equity because the thing is house prices are not going down. We're not going to see a crash. Dude, there's no if we saw a crash, dude, the world would have to be in a much worse place than it is now, and it's already in a shitty place. So again, let's get into real estate because I'm going to show you right before we go. We're kind of at the end of our time, but I want to jump into it just real quick and show you. Okay. Everybody screams about how things look terrible. 2009, 3.97 million home sales hit lowest in 2009. Got it. Everybody talks about we're in a new one. We're in the new portion. Okay. But what happened after? Like clear as effing day. If you would have went all the way into 2013, 5.08 million sales. Pre-pandemic. Pandemic is an anomaly. But we saw the market go up, dude. Okay? The market recovers. And we're in a shitty place right now. Perfect. Get into real estate, dude. Like I don't know how much more I can push it. 2008, 2007, this is the housing demand index. The housing demand is at the lowest it's been. People are still buying houses because they need to get into houses. Okay? Same thing. This is for North Dakota specifically. 2008 to 2026. This is why you get into real estate. This is why we have to get out of the mentality of a quick paycheck. Paychecks are not quick anymore. I've read the book, I read half of the book, The Intelligent Investor. It was so goddamn boring. I couldn't even do it, dude. But it has so much valuable information. And one thing that I pulled from it is if it makes more than 5% in interest, it's a pipe dream. Now, at the time, I was in crypto and I was lending or borrowing money. I wasn't even borrowing money. I was just putting it in pools because at the time, a node was making 15%. Whoa. And then the nodes crashed and the entire market took shit and I learned my lesson. The market is not quick. Wealth is built over time. So if you're going to take anything from this video, dude, get into real estate. You're wasting valuable money and time. If you buy into a house and live there for 5 years, chances are you're going to walk away with money in your pocket. If you stay there for 20 years, you're going to walk away with a lot more money. If you stay there for 30 years, you are going to be able to borrow against that home to pay for anything you might need in the future. Right now, there's something called, well, not right now, but there's something called a reverse mortgage where people have their homes paid off and they might have medical bills, they might have to pay for rent, etc. They can pull equity out of their home and actually pay for that and pay it back over time. People that don't have a lot in savings. Real estate is what's keeping people above water. And we've been tricked to believe that renting is the only way to do it because houses are so expensive. Dude, there is a way to get into real estate, whether it's commercial, a fourplex, a single family, a twin home, a condo. Dude, get into something that builds equity because right now this is the perfect time to be doing it because the market will shift. It always, always, always does. And if you're not ready for it, you're going to be sitting on the sideline pissed off saying, oh, dude, I could have totally bought a house in 2026. I could have totally bought a house in 2024. Don't be that guy. Don't be that person. Have a good day, though. We'll see you next time.